Hello everyone, welcome to EduTap. So in today's session, we are going to understand a very important topic of economic syllabus for the SEBI Grade A 2022. So the topic is about the national income concepts. So in the previous video, we have completed the market structure. That was also a very important topic of the economic syllabus. And today we will start with the national income. So now before starting with the topic, there is a big announcement from EduTap that we are providing for the SEBI Grade A legal officer practice 5,000 plus MCQs, and that also chapter wise. Okay, and you can get free 500 plus MCQs, and to know more about this offer, you can check out the description box below. So now national income. See, what is the meaning of national income? In the simplest term, you can say that it is the total market value of the goods and services that is produced in the economy in a year, that is produced in a year in the economy. So that is the simplest definition that you can understand what is the national income. So it is the total market value of the goods and services that is produced in a year in an economy. So see, national income, you have to remember two things. First thing is it is a monetary measure. It is a monetary measure that we are not saying that we are calculating, we are only calculating the total production that is happening. If we have calculated the total production, then we would have added one orange with one apple with one table. And can you add it? Because they have different units. So how can you add orange with apple with table? That's why we are taking the market value. That's why we are taking the monetary measure. That is, if one orange is rupees 10, if one apple is rupees 20, if one table is rupees 100, we can easily add it because it is in the same unit. And that's why the national income is a monetary measure, because we are taking it in the terms of the market value. That is what production the whole country has done in the year, the total market value. Okay, and the first thing that you have to remember is about the monetary measures. The second thing is about the final goods. That in the national income, we are only adding the final goods, because if we would have added the intermediate goods, that is the goods that will be again used in the production process, it would be very troublesome. We would have calculated one thing twice or thrice. Let's take an example of the table. We are using wood in it. We are using some nuts in it or something. So that wood would have cost like 10 rupees. The nuts would have cost 5 rupees. So we have already added the cost in the making of the table. Okay, we have already added the cost in the final good in the table. So if we have added again, then it would be 115. So we are calculating this 10 and this 5 twice. Okay, we are calculating it separately also and then in the table also, because in the table we have already added the cost of making the table. So that's why it has been said that in the national income, only the final goods should be added, the market value of the final goods, and not the intermediate goods. Okay. So making a pastry takes the sugar, takes the almonds and all, and takes the cream. So if we add the money or the market value of all the intermediate goods, then it would be double counting of the things. So we do not want to do the double counting, and we only take the final goods that is being produced in the economy. So that, I hope now you have understood the definition of national income, that it is the total market value, because we are taking in the monetary measure of final goods and services produced in an economy in a year. So we are calculating it for a year, because we can't calculate it every day now. So we are calculating it for a year. Now if there is production, there must be something that is producing it. Okay, so there are factors of production involved. There are factors of production that is involved in it, in the production process. So there is land, there is labor, there is capital, and there is entrepreneur. So land is earning the rent, the labor is earning the wages, the capital is earning the interest, and the entrepreneur is earning the profits. Okay, so this full is equal to the table cost, like 100 rupees. Can you say that the income is equal to the market value of the produced good? Yes, because the money must have gone somewhere, na? It can't vanish in the air. It will either go for the rent, it will either go for the wages, it will either go for the interest, or the left out will be the profits of the company, of the person. So this 100 rupees is also, see, the total production is equal to the total income. of that economy, and then this income must be spent somewhere. There must be some expenditure. Okay, so total income is equal to the total production of the country equal to the total expenditure in the country. So that is the national income, not only through the production process, not only through the production method, but through the income method also, through the expenditure method also, we can calculate the national income. I hope you have understood the basic point of it, and when we will do the calculation of the national income in the next videos, then you can easily understand it better. Okay, that the total production that we are doing, the market value of the total production is equal to the total income that is being earned in the country and equal to the total expenditure that is happening in the country, okay, or that is done by the people. So now you have understood the national income. Now we can move forward to the circular flow of income, that how the income is moving. Okay, we have understood that a rent is being earned, wages is being earned. These are the factors of production: land, labor, capital, entrepreneur. This is earning rent. This is labor is earning wages, capital is earning interest, and entrepreneur is earning profits. But what is happening, like how is this money circulating between the sectors, like how the household is earning or how the firms are earning? So for that we can understand it through the two processes. First is the real flow, that how the real things are being circulating. Okay, so these are the factor services that they are providing. These are the factor payments, the payment that is being made. Okay, so understanding the real flow is that there is household. Let's take the example of two sector first, okay, because if you understand this, the next will be very easy for you. So households and the firms. So the households are giving the factor services. Households are giving the factor services that they are providing. We are seeing the real flow here, okay, not monetary. So household is giving the factor services. So the firms will give the goods and services to the households. What is the firms giving? What the firms are producing something, and that they are giving. Okay, they are giving the goods and services. Now if we see it in the money terms, so the households and the firms, so the households are giving the consumption expenditure, because the households must get some goods now. How will they wear the clothes? How will they wear the shoes? How will they have the beds and all? Because the firms have produced it. So they have to give the consumption expenditure, and firms are giving the factor payments. Because how are they getting the labor? How are they getting the land? So they have to give the factor payments to the household. So this is how the money is flowing, the circular flow of income. That from households, there is some expenditure that is happening. From firms, there is some income that is going to the households, because how households will earn the income. This is how. So this is the real and the money flow that is happening, and this is the two sector, because first sector is household, the second sector is the firm. Next, we can see the fourth sector directly, because here I will tell you one by one, so you will be able to understand. So forget about the foreign sector. This is the three sectors. First is household, second is government and firms. So you have understood about the household and firms. Okay, from firms, the factor payments are going to the households, because the firms are using the factor services. The firms are using the factor services, and so they are paying the households for the factor services through the factor payments. Now from households, they must do something now. They must consume something. So they are doing the consumption expenditure, and that's how the firms are earning from the households. Now we have seen the two sectors completely. Now comes the government. Let's see the condition of the households with the government. So the government is giving some factor payments, because the government is making the roads, it is making the public infrastructure, it is making the parks and all. So it needs the labor, it needs other things, land and all. So it is giving the factor payments for the services the households have provided it. Okay, so the government is providing the factor payments to the households. It is also giving the transfer payments. There is unemployment allowance. There is so many social security allowances that is done by the government. That is a unilateral payment. Because for that the households are doing nothing. Okay, for unemployment allowance, what is the household doing? Is it giving any service? No. So it is a transfer payment. It is a unilateral payment that is done by the government for the households for the social security benefits. Now households is also giving something to the government. It is giving the tax payments to the government. Okay, we have seen the households and government. Let's see the household, the government and firms. So the government is taking goods and services. In the parliament, you have seen the tables and chairs. So for that also the government has paid something, okay? So payment is done for the goods and services that is being taken from the firms. So subsidies is provided to the firms, so that also some money is given to the firms, okay? So money is flowing to the firms, okay? So subsidies, like if government want to boost some sector, boost some industry, so it will provide subsidies to that firms, to that industry. So the firms are also paying some taxes, okay? It is paying some like corporate taxes on all. So we have seen the 3 sectors in the economy. Now we can move to the 4th sector that the economy is involved with. So it is talking about the payments for imports. So household is doing some imports. We all are buying clothes or something, one or for other, from the foreign sector, from the rest of the world. We can say rest of the world. So for that we are doing some payments for the imports that we have done. So as well as we are providing some services, there are many BPOs and all, there were many BPOs and all, and we were providing the calling services and all. So for that, the payments are being done from the foreign sector. As well as there is net transfer payments, okay? Like there is some person that has taken the citizenship of USA. Okay, but his or her family is living in India. So he is sending some money to his family, okay? So that is a transfer payment, okay? So this is how we are transacting with the foreign sector. Next is how the firms are transacting with the foreign sector. We have seen the households. So the firms are getting the payment, giving the payment for the imports that it has done. Firms has also asked for some imports now. It has also taken some imports. So it is giving the payments for the imports. As well as it is getting receipts. It is getting the income from the export that the firm is doing. So this is the 4-sector economy now. It is the complete 4-sector economy. Okay. So here net is added because we are seeing that what is going out and what is coming in. That's why when we talk about the rest of the world, we see the net. Okay. We are taking the payments and we are giving the payments, we are taking the receipts. Here again the payment for imports, that is we are giving something and we are getting the payment for the factor services, and here net is taken because we are differentiating like what we are giving out and what we are taking in. So this is the circular flow of income that is happening, that how our income is getting circulated between the sectors. Okay, we are doing some expenditure, we are earning the income, we are producing something. So that is the whole economy and the function of the whole economy. So now you have understood that what national income is, total market value of the goods and services produced, final goods and services produced in an economy in a year. Okay, factors of production you have understood, how the circular flow of income you have understood, and you have understood that the total production, value of total production is equal to the total income, equal to the total expenditure that is happening. This will confirm when we see the calculation of the national income. So do not worry about the numericals also, okay? We will understand in the next slide, in the next sessions, the GDP, GNP, NNP, NDP, all of the important things that you need to understand in the national income chapter. We will also understand that what is the MP, what is the FC, what is the domestic and national, how to calculate that, how to calculate gross and net. So the numericals also, do not worry about it. Now there is one thing that is left about the financial market. So households, firms, government, they must be saving something in the financial market, as well as they are borrowing from the financial market also. So it is not a sector, it is just a part of the economy, that is the financial market. Okay. So now thank you very much. I hope you have understood the whole topic that we discussed today. And if you have any query, you can mail us here or you can contact us through this number. Thank you very much.